Alfred Frenning? Who's that? Who's Alfred Fleming? Okay, Dennis, I think we can get started. We did.
Didn't we unmute Dennis?
Yep. Okay. Dennis?
Yes, shall I start
I
now?
think we're ready to go. Yep.
Okay. Good afternoon. I'm Dennis Galucki, and welcome to the 380th Imagine Buffalo program, and only the second virtual Imagine lecture hosted by the Downtown Buffalo and Erie County Public Library. Thank you so much for joining us today. This program is created by the Center for the Study of Art and Architecture, History and Nature, and ImagineLifelongLearning.com. We're going to start with our speaker shortly, but first, a little housekeeping. Everyone watching will be muted during our speaker's presentation, which will last about 15 minutes. We'll have plenty of time for questions at the end. If you have a question, please type it into the chat box and we'll get to as many questions as we can. This program is being recorded. You'll be able to watch it again later on the library's Facebook and the library's YouTube channel pages. As a reminder, we'll be here on Zoom every Tuesday at 12:30 p.m. with a great lineup of local speakers. Today's featured speaker is Ellen Pete Grum. Since 1995, Pete Grum has been the President, Chief Executive Officer, and Director of Rand Capital. Rand Capital Corporation. Rand is a business development company that invests in early stage or expansion stage businesses that have a high potential for growth. Rand has over $40 million in assets and investments in over 30 companies. Rand has been an early investor in some of the most successful companies in Western New York, including Liaison Corporation, Synacor, and Ultrascan Corporation. Pete Grum serves on the board of many companies and for the past 15 years has been active with Buffalo State College, where he is currently a member of the College Council. He is on the investment committee of the Kaleida Health Systems, University of Buffalo Foundation, and the Community Foundation for Greater Buffalo. He is also the previous chairman and current board member of Horizon Health Services. Pete has an MBA from Rochester Institute of Technology and a Bachelor of Arts in Economics from Eisenhower College. And now let's welcome Pete Grum, CEO of Rand Capital.
Thank you. Thank you very much. It's good to see some friends and colleagues and coworkers among the audience. I'm having the library run the PowerPoint because my internet kind of comes and goes. So if you could go to the first page. Whoever is sharing their screen.
It'll take us about 1 minute to get that screen up. We apologize for the inconvenience.
Okay. In the interim, we are in the Rand building. For those of you who don't know, the Rands are longtime Buffalo family. The George Rand the first and George Rand the second were chairmen of Marine Midland, and George Rand the third started Rand Capital about 50 years ago. So I see the screen up. The first page, this is a safe harbor, and it talks about the talk and what's real and what's not real and what you can rely on. Next page. A little bit about Rand. As we said, we're an externally managed business development company. You should kind of view us as a, I guess, a mutual fund of private companies. And we've been investing for about 50 years. Right now, our market cap is about $30 million, and we're trading in the $11 range. About 10% is owned by institutions, 67% is owned by insiders. The biggest single investor is the Pagula family, which invested $25 million on November 8th of last year. And then management and some of the directors are also big investors. Next. As kind of a snapshot, I was the second president. Company was founded about 50 years ago. We were one of the founding members of NASDAQ and went down for a 40-year anniversary, and we'll go down for the 50th coming up fairly soon. I started in '96 as the president, recruited everyone at the company. Dan Penberthy is the CFO. Margaret Brechtel is the VP of Finance, and she's on this call. We switched to a business development company, which is just a way that we're organized, and we operate and own a small business investment company that allows us to access government money, fairly low cost money in the form of 10-year debentures, which for us is almost the equivalent of permanent capital, and it's usually very low rate. 2016, one of our largest investments, a local company called Gemcor, which we bought, which was losing money. We turned it around and sold it for $15 million. Over the time, they also distributed about $10 million of cash to us. Last year, and around this time, we closed a $25 million investment by East Asset Management, which is the investment arm of the Pagula family. We don't have anything to do with the sports teams or the entertainment. As part of that, we externalize the management, which is just a nuance in our business. The Pagulas are the largest single investor, but they don't control the board. As part of switching up for a tax basis, we paid a big dividend this year, $1.62 per share, and then we did a reverse split. We are going to convert into what's called a regulated investment company. For you, those of you who are shareholders, you're going to start getting a dividend. Like a REIT, I guess we are not going to pay taxes at a corporate level. You're going to pay taxes when you receive the dividend. So it's a very tax efficient way to run the business. Next. So as part of that, we changed our investment strategy. we used to be oriented towards equity returns, so we would typically invest both in debt and equity of a company, but mainly look for the equity to provide the return. We are switching now, so we invest in debentures and debt from other companies, and that the goal of that is to produce enough investment income to be able to pay a dividend to companies. And part of that is we're switching out who our investors in our stock are. So people that were interested in the equity side, which was becoming more and more out of favor, we're now finding people who are interested in the dividend side. So we're focusing now on higher yielding debt instruments. This reduction in cost comes from externalizing our investment management company. That means we've contracted with a separate company to run RAND. In exchange, they get a fee, and RAND's able to put all the costs really of running the office and personnel into that company. So that reduces our operating expenses and also turns them into a variable cost so that as we grow, they will raise. The RIC status on the bottom reduces our tax exposure. As I said, that allows us to avoid income tax at a corporate level, and should be very beneficial to those who are going to buy the stock and receive a dividend. Next. So we've had to switch with what kind of investments we make, and so I get this call a lot. So we're looking for companies that are revenue positive. EBITDA is a measurement of free cash flow, so they're positive. They really need to be differentiated in their market. We like to talk to customers, so you have to have an accepted product. We kind of invest up and along the East Coast. If you look at our portfolio, you'll find we have a fair amount in Ithaca, a fair amount in Buffalo, New York City, and the Boston area. We also go all the way down to Florida. We have a medical device company. And in Georgia, we have a boat company. And we've invested as far away as Missouri, where we restarted the world's largest brick plant. The kind of investments we make is for expansion, capital growth, and ownership transition. We always co-invest with other people and are typically a minority owner. So we're looking for current income, and usually in the form of subordinated debt, usually with warrants or preferred equity. So we get kind of a blended return between the two in the 20% range. And that'll usually come for 12 to 14% from the debt and 6% from the equity that we own. We've invested typically $750,000 to $5 million. We require to be on the board or at least show up to the meetings or get all the information. And typically we're holding from the 5 to 7 year period. Next. We have, by charter and by practice, we're a diversified fund. So if you look, we're in manufacturing, professional services, software. This kind of will move over time, but there's generally a good mix. And as the bottom says, we have a fair value of our investments of about $40 million. Next. Our largest companies, one is a local company called ACV Auctions. That's a management team that we backed at Synacor. They're doing very, very well. What they do is it's an online auction system for dealer to dealer. So if you have a used car, you can take, I think, 20 pictures and they'll go online and have an auction, usually in 20 minutes. And that compares to how they used to do it, where they would drive to generally Manheim, Pennsylvania, around here and sell it at auction, which was expensive and only done weekly. Tilson is a large company out of Maine, does business all over the country. They recently were working on the Seneca Nation, where they put up towers and allow companies to do 5G as most of their business, but really internet, any internet or telephone capabilities. Andretti is a company that's in the Southeast. They're an entertainment thing. They have 100 to 120,000 square feet, and inside it's indoor karting, games and food. Surprisingly, they came out of the lockdown and some of them are doing more business than they did last year. FilterWorks is a company where we're rolling up automotive, the mechanical contractors for people that fix cars. We provide capital equipment and consumables to them. And finally, SciAps, which is out of the Boston area. They have a device that when you shoot it on something, it'll tell you what the molecular content is. This is a management team we backed before where they had a similar product, a little bit different technology. So those companies, you know, the top 5 are 56% of our portfolio. So, and that is typically about what the top 5 represent. Next. So over time, our dividends and interest income are beginning to grow. Recently, our interest from portfolio increased to 81%, and our net investment income was up from a loss similar time last year. We've invested recently in SciAps with a promissory note for interest income, and Tilson in a preferred Series F, which provides a current dividend. Next. Last quarter, to give you an example, we'll show you that if you go to the left, 675,000 investment income, which was an increase. Our expenses went down primarily because around this time last year, we had professional lawyer fees to get the transaction done. If you go down, we had a positive income of 8 cents per share. And on net investment income, and we had some write-ups which show up as unrealized gain and our losses. So last quarter, we made 20 cents per share. Thanks. We have a lot of liquidity now. I think we have about 60 million in assets in total, but 22 million of that is in consolidated cash. So that's money we are quickly putting to work through investments. We also have, through SBIC, can borrow another $3 million. If you get down to it at that time, well, we had about $19 asset value per share. And that was before we did a fairly large dividend to shareholders, which decreased that. Next. I think that may be it. That, I think, is the end of my prepared remarks. I'd be happy to talk to you about what's going on in Buffalo, but the area has transformed itself primarily through the work of 43 North and the Buffalo Angels. There is now money available for investments. I've been doing this for 20 years, and it's the best opportunities and the best infrastructure to invest. And it's really people coming back who will be the future, really, of the new Buffalo. But these will be new and exciting companies. M&T is very involved with their tech hub. So it's good. Things are good in Buffalo. Any questions or?
Pete, I'll ask you to keep expanding on the Buffalo scene. Do companies know you exist and in effect knock on your door, ring you up and describe their needs and invite an investment, or are you out and about scouting for up and coming companies? How do you connect? How do you make these, at least to even consider different companies to invest in?
It's a little bit of both. People can find us. We're well known to the lawyers and the accountants in the area, and that's a trusted source for us. But also, we've spent years driving up and down the Thruway. That's how we got started in Ithaca. But we're known, you can Google us, the SBIC program. There's a lot of advertisement about that. But people, if you have money, people can find you. So they will come to us, we'll talk to anyone locally, but it may take 3 or 4 visits before we invest. A lot of times we'll say, go back and do this, this, and this. And if they do it, we'll meet with them again and see where we can go. We have criteria about what we need to invest in. We can tell fairly quickly whether it's going to be an investable type company. We don't invest in retail really, or real estate, or a lot of things that people are into.
A lot of viewers might think in terms of the term venture capitalist. Would you call yourself a venture capitalist?
Yes, we are. Yep.
Right.
One of
And
the first venture capitalists was the royalty of Spain, and they backed Christopher Columbus. They bought his boats and said, "Go to the New World, and we get some of what you bring back."
good. And the emphasis away from equity into a fixed income. You mentioned that that's what you're sensing the public wants, your investors want, rather than those stakes in some future Apple or Uber, or name a company. Is that that sounds almost like a Berkshire Hathaway model in some ways, to get those.
Well, I think it's the opposite. Berkshire Hathaway is typically an equity investor. I mean, they certainly bought and owned companies, but in our business, it's just going a little bit more upstream. So the companies are a little bit older. We hope and believe these are less risky, but there's still a fair amount of risk in these companies. And we have done in the past true startups, which are a lot of work and very rewarding. But a lot of my job is kind of funny. I give you 10 pieces of paper and I want 15 back. So we all spend, probably like kids or anything else, we spend more of our time with the ones that aren't working out so well.
Many of the deals, it seems, with Berkshire are about preferred and 8% returns,
Sure.
better than the average person can find, it seems.
Exactly.
We chatted a little bit before. What's your thoughts about how do we help a community? That varies. We hear the terms a poor community. People will measure it that way. I've often thought, how do we help the community by way of the library system to better understand the mechanisms of the capital markets, of the value of saving and investing? Do you have any thoughts on that? How can we help create a culture of investment, which is what I hear you saying we're doing a better job by having these different funds and startups and incubators going on. How do we really help foster that awareness so people think that way in school and beyond?
Well, I think you're probably, if I understand your question right, referring to personal investing, that people should start saving when they were young and have that grow over time. And that's probably a different problem than I was addressing. And that's how do people with ideas get companies started. And so I don't really know the answer to your first thing about how do you get people to save more. I was always growing up, when other kids wanted a mini bike, I wanted a CD or a stock or a bond or something. So I was always wired a little differently.
Well, might have been family values. It may have been things you picked up, or like you said, just wired differently. But someplace we've developed STEM, science, technology, engineering,
Sure.
to meet those needs. And I've often thought we should start to talk, at least in the community, about how to do that in the area of finance. That's part of the fifth Tuesday of every month here in Buffalo, as part of the Imagine series. That's what today is, the fifth Tuesday, as it turns out. And it's the art of investing. It builds on a class that I've been offering at Chautauqua all summer long, except this year with Chautauqua being closed, at the library. And it seems to fill up a room of interested people. So that's the context. You're one of the first outside speakers that had to use this format, we'll bring bankers and others in the field to further discuss that idea of how would we think of the culture we're working to create, especially since we are creating that culture of new firms, incubators, if you will, technology centers, that sort of thing. So I agree, something is changing in Buffalo for the better, and through the library, we hope to help awarenesses of that factor.
Dennis, I'm going to jump in. There's a couple questions in the chat. Okay. Here's one, and it says, with everything going on nationally in healthcare, any thoughts on how RAND is looking at healthcare for opportunities in the current government regulatory healthcare environment?
We've done a fair amount of healthcare. We've done devices, we've done software. Probably one of our more exciting ones is a local company called Centivo, which is doing health insurance mainly for corporations that have private that are self-insured, and it's an exciting concept that they have where really they are trying to get you to use more of your insurance, but not go into the emergency room. They want you to go before. So that's an exciting part of it. You know, healthcare is 12% of the GDP, so there's a lot of money being spent there, and there's a lot of change. So we participate when we can, and have historically had some fairly good. One of our companies that's very exciting is called Rheonics down in Ithaca, New York, and they have a machine that is used for COVID testing. And out of the, you know, they certainly didn't plan for this, but they have, all of a sudden they're kind of the belle of the ball with a lot of sales. Theirs is a 4-hour, very precise testing, and are beginning to sell their device and the consumables that go with it.
Okay. And then there's a question. Hello, Pete. You know I'm a sustainability geek. The word was used in one of your slides. Can I assume you were referring to the strength of the market, not environmentally sustainable of market position? Then it goes into great point. We need to implement financial literacy mandated in academic curriculums from kindergarten. You are correct. I'm not sure if that's two questions.
That's probably three. I know who asked that. So we do not look at sustainability as part of our function. Many of our companies do, and they're all kind of going that direction. But on the investment committees that I sit on, they're all in tune with ESG ratings and a variety of other things that are important for perpetual endowments.
Okay.
Pete, I think of you as a closed-end fund that, for as long as I've known Rand Capital, trades at a discount to the actual value that you showed. Is that still the case where when you make a calculation, the market prices you one place and you think you're worth quite a bit more? Is that a factor?
That is still the case. We have been doing better. Companies that pay a dividend tend to do better than companies that don't. So that's part of our switch. We track ourselves according to our peer group, who are similar companies, and we are doing okay when compared to them, but it's like being the tallest midget. So we are working on that and understand it. As a company, we view our stock as attractively priced. So the directors have been buying it, and we've been buying it back as a company.
Nice. Well, any final thoughts you wish to leave? I need to give the caveat that you are a traded company, like you said, going way back on NASDAQ, so that nothing here should be construed as a recommendation for purchase, although certainly an invitation to people to do their homework, investigate further, and go from there. But the library or Imagine is not certainly making any recommendations of Rand Capital.
Yes, thank you. No, we're always available. You know, you can call us, so we're easily acceptable, and we answer the phone and we get back to people. So if you have any thoughts, give me a call. If you want to sit down and meet, give me a call.
Well, and the good news is, as I read in your bio, you're involved with many organizations here in Western New York, sharing your expertise and serving on different boards. That's a major investment of yourself into the community, not just your funds capital into the community. And we thank you for both. How is that? To finish up as such. Pete, thanks so much. We're going to thank you for joining us today, folks. We appreciate this new format hosted by the Downtown Buffalo and Erie County Public Library. Be sure to join us next week, same time, 12:30, same Zoom link, when we talk to Don Boswell, President and CEO of Buffalo Toronto Media, Public Media. Don will also be honored with the Imagine Greater Buffalo Award. We've been doing this since we started the Imagine program. We'll be showing you the other awardees that we've had over the years. So I encourage you to tell others and join us if you can next Tuesday at 12:30. I'm Dennis Galucki. Have a good afternoon and good health.